Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Monday, and we had an interesting day. I came in this morning, futures are up 10, 12 handles. Tried to do the same exact thing I did on Thursday when the futures were up 10, 12 handles after a close on the dead lows. We were talking on the desk, and it was pretty funny. I'm like, on Thursday, everyone wanted to just short the first bounce because we had our close on the lows, gap up, can't be sustained, and then I guess the computers knew enough to make the S&Ps go 25, 30 handles, just squeeze everybody, and then it rolled over at the end of the day, and then on Friday we had the gap down that everyone wanted on Thursday. So today, after the close and the dead lows on Friday, question was what was going to happen? Was the gap going to hold and then maybe continue to the upside, or would we sell off, and would we sell off in the first half an hour or later in the day, and where would we do it from? So we mapped out resistance 1 and resistance 2, and we went right in between. But so if you shorted that rally and used the H sell setup, you know what? You probably had a good morning, and there were guys in the VTF talking about shorting the rally. And then also in the hole, if you were very methodical, you had your first buy at the 50-day for a bounce that didn't make it, and then you had that acceleration lows for a better bounce that didn't make it. So all in all you did is have trades. Everything else has been pretty much broken. The XLE's been broken, the OAH has been broken, oil's been broken, a lot of high beta names are below all the moving averages. So I don't think anyone's in a rush to do anything in any of those names. If anything, people are shorting them, and if you're good at that, making money. But as far as trying to be long, ever since last Monday when we broke the 8-day, I think people have been just out of the way. And granted, it would be better to be all in short or pressing shorts in every breakdown or every rally. But some people are good at that and some people aren't. You look at the spiders here. You look at this V bottom. Okay, since the V bottom started right here, okay, a lot of people out there were trying to short the rally, I think starting here, and they didn't do so well. Okay, guys who were long stayed long while we were above the 8-day moving average in some kind of portfolio approach because it made sense. Then right around here it got a little wishy-washy. So right maybe even here you could have said, okay, I'm gonna lighten up and be on my toes, use some quick feet just in case, and you know what, nothing really happened during the next 4 sessions, so maybe you were a little upset you weren't long enough. But still at this point, you had the Qs didn't make a higher high, you had high beta tech pretty much starting their new downtrends or breaking momentum levels, so you could have been on alert for finally what was a break of the 8-day. So if you went pretty much out short here or flat here, remember that Tuesday reversal? That was pretty good. But then if you took home a third long, you didn't get any follow through. You had to get out pretty quick. And then this is that Thursday I was talking about where basically opened up, squeezed everyone right back to the pivot, and then reversed to the lows. And then today, they didn't really squeeze the overnight shorts as much as they did on this day. And you wind up having a trade through your pivot, which was right here. Okay, that was, what was that, 200-85. We also closed below the 50-day, and we just touched the 100-day. So some people like, Red Dog, that was your plan. You said, 1980, you want to get long. Okay, and we went to 1982. And then oil, I said 55. So in my head this weekend, I'm like, what, I'd love to see, 1980, first thing Monday morning, and maybe 55 for a buyable bounce, and then see if there's commitment to it. So with the way it opened up today, and then came through the prior lows and then gave you that first move of somewhere around 11 o'clock, it just didn't feel right. Even in the XLE and the OAHs that gave you a little bit of relative strength. And I know every day people are IMing me saying, oh, look at the divergence in the oils, they're ready. And then they fell. So the question is, how do you trade that, if you're trying to catch a cute long until a new trend is established? Because these are in friggin' downtrends, and they've been long, and they've accelerated and dangerous. So anything like that, you better be, quick and nimble. So go back to this chart one more time before we get into others. So I gave you the 5-minute chart in the spiders to try and give you resistance 1 and resistance 2 to figure out what type of move we could have and where you could potentially short. Okay, you had your gap up here, basically right into resistance 1. Okay, we talked 2 resistance. Resistance 1 was right around here, and then resistance 2 is up there. So it went right into resistance 1. And some people ask, what's the H cell setup pattern? Well, here's your pole, okay, or right to here, wherever it was. There's your H, and then you go below the prior low, and then that continues the H. So you short a rally and then you add momentum through the lows instead of just shorting the first time through. So anyway, let me just show you closely, what happened today different, or what you could have seen, because I tweet about certain things during the course of the day. And right on this move, this little top, if this was a daily chart, this would be a red dog reversal. Pushed through the prior level, came below. Okay, and then right here, I said, you had your 30-minute range with the high of 202, whatever it was, 53. Some people now had the invitation to short versus that, so you know what your risk is. And then, if you were trying to be long here, you had to be out when the gap started to get filled, and that was 201.95. So right here on this bar down, that had you thinking, okay, I can't be too long. I got to figure out if we hold the prior pivot, if we go to the 50-day, so to speak, the whatever. So anyway, closed below, and then that's when maybe some guys even added to the spider short. Came in, never reclaimed it, and then continued down into the prior pivot. And then this is when we had our first calculated trade. Into this, 50-day, I think we bought some, and then you had a move back above the prior pivot, which was 200-85. Gave you a quick little trade, to the 21-day, and then wound up staying below it. So you had to take that trade pretty quickly, and then, and if you had a remainder on, you had to get stopped out right when it broke below that pivot, because the new pivot on the day was 200-38. So I said, in the tweet, just so you could decipher, because listen, guys, I have many trading accounts. I'm on a radio. I'm talking to the media. I'm trying to trade. So I'm not always going to be able to tell you if and when and how things go throughout the course of the day. I give levels in my morning note. I talk about it in the call, and then I try and give a tweet out here and there. So you have to kind of understand what it means and be a little bit ahead of the curve. Because if you're not on the VTF, you don't get to see things live. You don't see when I get long, when I get short, what I'm holding on to, and you don't listen to it in the process. So anyway, you go back to here. I think right around here, I sent the tweet out, said, spiders went to the 50-day, which was right here by 8 cents. Trying some. Let's see. It gets interesting if we take back the red dog reversal pivot, which is 285, and that gave you a quick move to 201.40, which isn't a lot, but that was almost 90 cents in the spiders. You could make your daily bread that way if that's what you do. If you trade for just active cash flow and you weren't looking for a swing. So anyway, if you did, buy it here, add it here, sell some strength, into a prior resistance, then you saw this bar right away. You should have been like, ooh. We just took back more than half of this second bar. Let's be a little careful. Then once it went below this, you probably, if you didn't sell enough up there, you sold some, and then this happened fast. So that trade was over. So you have to figure out how you handle that. But if you used the 200-38 as your stop, you were out of the way, and then that happened. So then here you had your doji. This is when this accelerated downtrend pretty much broke for the first time, and then this is when I said you first saw your first 5-minute igniting bar, some commitment to it. So this is when I got long once again. I said, let me try this again. This time it was from a more accelerated downward level. And then from here you had a decent trade all the way back up to, the 201 area, the prior resistance. And then I think on this move, you sold some, and then I think we were holding on thinking maybe we get another move, through this, and it just, never transpired. I think it had one little fake out. Right here, I said, you know what, we're holding higher. If we get above 200-20, it could get interesting. You had that happen, and then it came right in. That should not have happened. You shouldn't have had a 2-bar move, 1 bar down for this rally to be sustained. It should have been like this. It should have, had this bar, went sideways, held here, and then went again. Not that. So if you were still long, you said, okay, I got to get out of the way. So anyway, that's some of the thought process, and then came up and, closed pretty, not a compelling close. So anyway, that's some of the thoughts on this mishmash of a spider chart. So we'll see how we open tomorrow. We'll write down this pivot, which is 198.78. Now you have the 150-day right below it. There's the 200-day. If you want to go, key Fibonacci retracements to see if there's any commitment to that, because everyone's saying to me, Red Dog is a Santa Claus, Santa Claus coming. So usually, you look at retracement rules, and right here, we've already been below the 0.382% retracement. You could hit the half and show commitment. It just means that there's not a lot of momentum there. So this is half and this is 0.61. That would be below the 200-day. That would get people really bearish. So I like to see the 0.382% hold, because that means there's pent-up momentum and commitment, and it's easier. So we'll see what happens. You go to the Qs. Remember I said how yeah, you could have been on alert because in this little move here, the Qs never made a new high, okay, when the spiders did. So that showed you relative weakness in tech. That was a leader. Then here was your out when it broke the 8-day, and now it's heading down to a more compelling levels. It hasn't reached the old September high yet, and the 50-day, which could happen tomorrow. So we'll write down this. We'll write down this pivot, and we'll even, I guess, write this down just in case things really get shaken up. And then, for just some tactical thoughts before I get into some stocks, the XLE bounced and it looked decent, okay? But when you have a broken sector and there's a lot of emotions there and a lot of liquidations, you have to measure your commitment to it. And, you go to the XLE, it closed back down at lows again. There's been a lot of these type of trades where it looks good, fails. Today looked good for a second, failed. And it's below every moving average, so it's not clear-cut buys. It's in, downtrends. And this has been in a downtrend for, you can almost see it's so apparent when you go backwards and look, okay? Here was when I talk about ascending channels that break, well, this one broke here, and the accelerated one broke here. And then it went below the 200-day. So this hasn't been a macro long or shouldn't have been in anyone's portfolio since this. That broke momentum and intermediate levels. So if you're trying to play a bounce, because that's all you're looking for is for some type of oversold bounce here, you better make sure there's commitment to it. So you go to the 5-minute chart and see here, okay, let's go. Okay, this was, I guess, the gap up this morning, okay, with the XOM upgrade. And then really, when it went all the way this way and breached the opening print gap, that was sell signal number 1. And then I think it tried to go one more time. Okay, here, another little rally. Okay, so the question was, would there be some commitment to this? Okay, this was your first gap up. Probably people were short. It was a little bit of a squeeze, and then it started to fail. Made that low with the market. Okay, gave you a quick move. Okay, then gave you another move, and then this should have been your out right here, perhaps, because a lower high versus that high, broken sector below the moving averages, and then it just failed. Look at that. So this should not have broke if there was going to be any commitment to this move off the lows here. So anyway, that's how fast you have to be in that tactical type of tape. Then you have the USOs that closed on the dead lows. Friggin', another, look at that. That's 2103. Remember that when I started, putting this on, people asked me to put it on my morning notes. So I've been doing the levels. First of all, here too, broken trend below the 200-day. No need to be in oil. Broke a key level here. No need to be in oil. And this was 80. Remember when everyone was talking about 80, the world would collapse at 80, or at least get out of the way if you're still in it. Well, look how it had a clean break below 80. That was what it correlates to. Went down, rallied back to it, failed, and look where it is ever since. Jeez. Okay. Thank goodness. I don't think anyone in our VTF or me, I don't think I've been long oil once in the past 3 months, especially overnight. So, I kind of I don't feel the devastation, and if you're in that and you're caught in it, I'm sorry. Same thing for a lot of the oil names. I've been little here, there, little tactical trades, but I haven't been like, okay, now I'm going to start accumulating a low like I did maybe in the banks way back when in the financial crisis, or even in some of the ETFs back in October when it felt as if we were oversold enough for that rally. If you look here, the XLE actually gave you a move this was the last time I think I traded the XLE, here into this. And then every now and then, a small trade there, but then it still was rejected by all the moving averages, and then there you go. So let's move on to some of the stronger stocks, which there aren't that many of. That's why I'm not so inclined to be, all in long, where I'm so enamored with it. You look at Apple. Apple, if you're on the VTF, I started talking about how I think we could be a buyer around the 50-day, and I started at the 50-day, and thank goodness I bought a little bit more and then traded out of it. Overall, still in this downtrend. Okay, this if you remember, this was the last projection I had when it gapped up after earnings. I said I think you could see 113 to 115. Okay, here was your last tier 2 buy, and I sold here, and then everyone's busting my chops why I wasn't still in Apple, and I was just like, just a little extended. It could go without me. I was a little upset it was leaving without me, but whatever. Then, broke its 8-day trend. If you look at it here, what is something that Apple has not done during this entire move from 101 for October, November? It did not break the 8-day, and that happened there. So that was your first shot across the bow. And then it gave you actually a little bit of a reflex move into this red dog reversal. Okay, that was your next little sell signal right there. And I think that's the signal that Lazen off the charts shorted. And now you have this. So I am not taking it overnight. I'm trying to be pretty tactical here. I do think if you had to be in something, maybe this. But but at this point, still no clear signal to be in it for more than just a trade like we had here. If you were in for this trade, once it broke the halfway mark, you're out. Now we'll wait and we'll try that again from somewhere else. BABA, the same thing. BABA looked like it was going to go a little bit pre-market. And again, the market failed, so I got out of it well before it went red. This was when it trended above the 8-day moving average before your outside day red dog reversal at the target price. And then since then, it's been rejected by this downtrend. It looked like it was ready today, but the market wasn't. So now we'll see if it continues to hold higher. I just showed you 3 different indices that are at new lows, and BABA still is above the low from the 8th, so it's kind of still in the game. So we shall see. Keep it on the radar. Facebook, was a little weaker than normal today, but still above the 8-day. It's just a bit choppy. Something I'm not long either. I didn't touch it today, actually, because it just didn't look right today. But anyway, we'll see what happens tomorrow. If it continues to hold, just say this. There's not many vehicles that look like that. You have, Google back to lows below all the moving averages. So that's in a void or a short, I guess, on rallies. I've been avoiding it the past week or so ever since that that one day that got me good. I don't remember what Friday it was, but whatever it wasn't fun. Amazon has been broken ever since Cyber Monday. Remember, they sold that. Yeah, we had a good trade here. Remember the low, the higher low, and then it was trending when it broke this 308 above the 8-day, and then what happened here? Boom, it broke. They sold Cyber Monday. That was probably the last time I really focused on Amazon, and it's been down ever since. I guess if the market gets some traction, we'll see how it handles this little lower pivot. Guys, got paid taking LC overnight, and now I think I tweeted somewhere around 10:30, and when it was up $1.50, and I'm like, I think it's a better sell than a buy, and PS did you could have sold some strength or sold someone and went back below 25.50, and now see if it goes sideways, not enough data here to sink your teeth in so much. So if you got saved and you made money here today, congrats. Habitat, wow, what a move on that thing, huh? Jeez. This is when I got long it, and then it was calculated right here, gave you a little sell signal there, it was upgraded today, and pow. So you got to pick your potions on these things and move fast. But anyway, see what happens tomorrow around this pivot. This is a huge wide range, bar to the downside, and I don't think I've traded again since somewhere in here. But I missed that, obviously. But anyway, small sell signals sometimes lead to something crazy, and that's what that was. As far as gold, RD was talking about it, short on Friday, I think even Thursday, Friday. I haven't really been that active in the metals because they've been erratic and random. This was the good trade we caught when it was calculated intraday. And then just be careful here. This close in the lows, they knocked the teeth out. Okay, this close in the lows, they knocked the teeth out. This was actually looking pretty good. Like when you were talking about it, RD, saying you were shorted, I didn't see it. It's holding the 8-day, trending higher, holding in there. I'm like, why would I short gold here? Anyway, look what happened. That's why I don't trade it, because when it looks bad, it's good. When it looks good, it's bad. So anyway, closing the dead lows here. So maybe now that people don't want to be shorted on the dead lows, it breaks this little trend here. People are talking about how Russia has been accumulating it and they're in trouble and they're probably liquidating. Who knows? That could be a good thesis, but good to probably cover some, and then maybe if you close on the lows, a good book says take it home short. If this was a stock, I'd feel much more comfortable shorted versus it being the GLDs. And while we talk about Russia, wow, look at that. This isn't Portugal or Greece. Not saying that they're belittled to Russia, but first of all, this has been below the 200-day ever since 24. So that's an ETF you don't be in. And then when it broke this key level with a gap, look at the acceleration to the downside. Russia was down 11% today. Holy cow. So they can't be feeling too good there. And it's pretty big economy, not the hugest, obviously, but they do have some power. They do have some buttons. So I'm just saying that's a little scary. I think that's why, last week I was like, let's look at the 50-day. I'm going to be excited if we see 1980 or close to 2000. I want to be a buyer. I want to be a buyer at oil at 55 and change. That was 2 weeks ago, projecting where would we be almost today or a week ago, whatever it was. But now that we're here, the action is not giving me the signal yet. So you want to have a plan and then wait for the market to confirm the plan. And at least if you were with me and thought you'd see 55 or so oil or 1980 in the S&P, you probably been out of the way for 3-4% and maybe have a little paper cuts along the way. But I'm telling you, it's much better than a gusher. And we will get our setup. We have the Fed Tuesday, Wednesday. Today, if you took home a lot of shorts, I think you're playing with a little fire considering how oversold we are. We're like minus 46 on the oscillator. Typically minus 55-ish and more. You get your, then it's like an oil slick that could probably get you the bounce. If you were looking for the bounce and you took home, longs and you're active, if you sold last week's strength and you think that you have a great, average cost here and you're willing to go lower, I guess that's okay. If you're trying to, be a little bit more meticulous, but might miss something, that's what I'm doing. I went out flat. I'm trying to be a little bit more meticulous. Sometimes it's good, sometimes it's bad, but I didn't see any blaring signals to be long, and I wasn't going out short. So tomorrow we'll see what type of opportunities we have in front of us. But if you've been out of the way since we broke the 8-day or broke the 21-day, that's half the battle. If you've been short, congratulations. You're probably doing well. And if you've been trying to be out of the way and a little tactical here and there, you've had to be a surgeon. And some of us are surgeons. Some of us, need some better utensils. And that's what we all do. We work on sharpening our utensils. Have a good night. See you tomorrow morning.